The following is for entertainment purposes only. I am not a financial advisor. I am not responsible for any losses, only the profit.
What's up, Octo Nation? It's Charlie. I'm going to be your host for today. Right now, we're going to take a look at Conyers Park 2, second. Okay, this is their second Spac acquisition corp. Ticker is CPAA for the common, CPAAU for the units. Those are going to include one common and a quarter of a warrant. Okay. CPAAW, which are the warrants, and keep in mind that those have a $18 strike price. Okay, so if you ever want to long hold those through and you ever want to get commons for it, you got to wait till it's above 18 plus whatever you paid. So keep that in mind. We are sitting at $454 million in the bank. Okay, this is a 24-month time limit, so a 2-year plan. We have only got till July 22nd of next year left. So it's already been about a year. So a lot of these big ones, about a year, you start getting some information out there that can make these things spike. So I thought it was a good time to put this out. Again, this is the second SPAC for the team. They've got collectively $10 million at risk that they may lose if no deal is acquired. Keep that in mind. The target for these guys, focus on the consumer sector and consumer-related businesses, which complements our management team's experience and which will benefit our operational value add. Pretty generic, but pay attention. We've got a lot of hints they've put on the first business and other stuff they've said. They have also said, but it's not official, this is not from the SEC, but they have said, the snacking space, a broader food category over time, their brand that they clutch from, okay, is Simply Good Foods. They will look to become a portfolio of brands that bring simple goodness, happiness, and positive experiences to consumers and their families. Isn't that a great slogan there? Just makes you happy, all right? These guys got, these are like the big dogs when it comes to consumer space. I know we have a couple that we've done for food, but these guys have been all over this baby too, okay? They've got tons of connections with all the big shopping centers. They're usually big on Wal Mart, okay? Their past SPAC brought in Atkins energy bars, protein bars. Have you seen those? The Atkins brand. Atkins is like a low carb type of diet, okay? And so they started making like the protein bars that are not sugar hounds, because most protein bars are like super high diluted in sugar, and they make you fat. So this was actually I think one of the best timings for Atkins when they came out. I don't know, maybe 3 or 4 or 5 years ago, something like that. But these are the guys that were front running that. The past commons, they actually ended up 3xing. So that's great. That's good to keep in mind, that 3xing about $30 worth. That's fantastic. For the time, it was one of the best performing SPAC deals ever. So that's great. These guys got a winning background, right? Past warrants, they hit about 4.5, 5x ish. They did pretty darn well. Jim, the executive chairman dude, I've listened to a bunch of interviews with him. These guys are kind of like the Hennessy dudes, where they just have like nothing out there. I tried to find hints all over. I've been trying to find them for a while now. Listened to plenty of stuff, read tons of articles, but just listening to this guy, he's definitely a global big macro thinker, okay? He's always thinking like bigger is definitely something that's gonna be better. He's never like let's get in tiny. No, he's all in kind of big guy, which is cool. He's also definitely a numbers guy. When he was in with Gillette, the razors and stuff, he actually came in and pretty much saved them. They were doing pretty bad, and he came in and revamped them and brought them to light. He's the one that told them, he's like, gee, your revenue for the Gillette razors is on the replaceable cartridges. So why don't you focus on that? Sometimes it's just another eye coming in, but sometimes, those little things like that can be game changers. So he's a good guy to have as the executive chairman for sure. He started out in Centerview in 2006, okay? He's a former vice chairman of Procter & Gamble, former chairman, CEO, and president of Gillette, former president and CEO of Nabisco, okay? Former head of Kraft Foods, General Foods, Worldwide Food Group at Philip Morris. He's got a BA from Knox College, MBA from University of Chicago. This is a CEO guy. I couldn't find this guy stout anywhere either. Sometimes this is a good thing, because sometimes you want these companies that nobody knows about. That way you can get in early, like we talk about, and then be able to ride that train super high. And like we're all about here in the multipliers is multiplying. All right, we're not here to make 5-10%, letting stuff ride over time and gradually maybe get 4% a year. No, we want the 2 to 5xers. Okay, that's what we're here for. All right, so I think this is good, kind of getting in ground level ish. All right, this guy joined with him in 2016. He's actually a partner now, so that's great. He's a former CEO of and president of Big Heart Pet Brands. I think like Kibbles and Bits is under that, like, some of the biggest pet brands out there. So this guy's big in that. Former CEO, president of Hershey. This guy was a CEO of Hershey's. Okay, Hershey bars, come on, man. Previous senior management positions in Nabisco and Kraft Foods. He's got a bachelor's, of course. The CFO, he joined in 2014. He was head of U.S. private equity and Pamelona Capital Management and head of the consumer group Vestor Capital. 20 years in private equity experience. Went to Harvard, got an MBA, BA of Michigan. This was pulled kind of former with the last transaction, but you can just kind of see, one of the first things they pop on is high margin. Okay, they need to make money. They understand it. They understand branding, but if you can have both those, you've got a killer combination. You got branding, and then you've also got the money, the margins. Okay, strong, free cash flow. All right. Not only did he get Atkins, but he helped them grow it. He helped them. I think he was the one who actually got the Atkins brand of food products, protein bars, shakes, all that, into Walmart. Right. So he didn't just buy it and say, okay, whatever, let's move on to the next one. He's like, no, let's build this up a little bit, and then I'm going to keep moving on to the next one. So I think he was the one who got him in there. Let's see. They understand the sector. With trends, right? Follow the river, follow the fish. Okay, if they're headed downstream towards something, follow that. All right. Don't try to fight it and go upstream and create a new trend. Just follow the trend. It's health, wellness. Snacking. Come on, convenience-oriented products, ongoing e-commerce. So they're trying to get on e-commerce. Also looking at like organic, locally sourced products, brands with broad multicultural appeal. Outsourcing our critical CPG related services, affordable luxury products. Here's just some of the brands these guys have been involved with. Come on. I think everyone knows almost every single one of these. Braun, DiGiorno Pizza, Del Monte, A1, Chips Ahoy, the Mach 3 razors, Nabisco, Milk Duds, Reese's, blah, blah, blah. These guys have insane brand exposure. All right. Talked about that. You can tell here the market share. These are some bars that I know, like Quest Nutrition. The Quest bars are my personal favorite, like protein bars, because they're actually we're a front runner for like the Atkins diet type of fad, but it's low carb. Quest bars are actually low carb, but they're really good, and they don't use a bunch of crap ingredients. I will say that the Atkins bars, because I've looked at them before and actually bought some. These a lot of like GMO. Hexane derived soy crisps, soy protein stuff, where like Quest doesn't. But regardless, we're here to make money. Let's not get into health. Look at this. They have 11.7% of the market share. All right. Even above Cliff bars. I thought Cliff was massive, but above Muscle Milk, all in. All right. Let's take a look at the tickers, shall we? So start off with the warrants here. Warrants. Let's take a look at the warrants. All right. These started out, around, about $2. They rode up and hit like basically where I kind of a little bit higher, about almost at 3. They hit right here back in May. All right. Long time ago. Back in May 17th. That doesn't make any sense. You know what? That had to be previous something, because these guys weren't there in May. So this is a previously pulled ticker. Huh. July, April. Anyways, TradingView obviously isn't too updated on this, but they have been trading. I guess the max they've been is almost now then, right? At 275. All right. So anyways, how I'm playing this is I put it a buy at 295 because again, I don't want to buy this second and get these little micro 5% up and down. Like right now, today it's down 4%. You know, I want to catch this when it's rising up and about ready to double or triple. And then once it doubles or triples, I'm either going to pull out half and let it ride with the free money that I earned, or I'm just going to pull out and call it good. Right? I think in this market, you're probably best to just probably let it ride up, take your profits, dude, and just go to the next one. Okay, come back to Octopus Nation, see what the new video is, and maybe get on that one next with the money and just move on. You know, it's just way too volatile at this point. Okay, people see the price of these tickers and they automatically assume it's either cheap or expensive. One thing you've got to pay attention to is the size of this baby, okay? What were we at here? I think it was what, almost 500 million? Can't remember, 450? Yeah, 454 million. This is a big SPAC, okay? That's why it's trading and even started around $2. So some people look at the fact that something starts at $2, like that's too expensive. You'd be stupid to buy in here. But they don't realize it's only like a $100 million SPAC or a $50 million SPAC or a 20 or something, you know. So don't always just go by what the number is. Look at what it launched at. Usually tells you a good deal of information. Like if it launched around $2 and it stayed around $2, it's probably worth a lot. And then look what look at the amount of money that's sitting in the piggy bank. All right, coincide those. So anyways, let's go over to the units. Remember, these are only a quarter of a warrant, all right? Now, where are we at? These have actually gone up a little bit today, up to $2, $12.30. Okay, so that might be the new high today, is it? Looks like it, at least on this chart, from what I can tell. Anyway, same old story. You know, rides about 1050-ish, riding it, and just recently, you know, come about March, it dipped a little bit, dipped only down. See, in March, this dipped with that March big crash we had. This only dipped at $10.06, okay? Pay attention to that. The commons, when the market go tanky tank, okay, these usually stay pretty good. You know, they don't go down to like $1 or something. You know, look at this. This only went down $10. That's great. Pay attention to that, okay? Anyway, since then, you know, it rode up, but it's now at all-time highs. You know, it's been hitting 11 and change, whatever, 12. You know, just watch that. The commons, I like where these ones are seated here. Back in July, this actually peaked out at about $12. Okay, so this hit about 12. Yeah, look at this, just riding the $10, $11. Let's see if we can grab March, June. Let's go far back. What'd this do in March? Oh, it's getting into the 17s again. Yeah, so this is March. This only hit down to $10.45 in March, okay? That's crazy. It only went down to $10.45, so that's cool. That's why the commons are rad, right? The warrants, you know, those can tank a lot harder, but you got a lot of institutional money built up in here, and you know, a lot of shares by the guys who are running this, still trying to get their deals. So they're not selling, they're holding. You know, they got tons of money on the line, right? So that's another reason I like SPACs. Even when the market crashes, this thing only went down to 10.44, okay? And right before, well, yeah, okay, that was still before in July 17, but let's not pay attention to that. So here, it actually looks like we had highs of 1180. We're right now sitting about 1137. You know, smart. If you want to do this, catch a ride, I'd say, you know, you could probably put it around 12-ish or something and probably catch it on the way up. So, big decision on that. If you have any plays you want me to take a look at next, maybe something that nobody's talking about, something that we like to get in early on, just put it down in the comments. Let me know what you're thinking, and let's all make some money, huh?
Hey Octo Nation, we need your help. Please help spread these videos around to your friends so we can all multiply our money together.